Welcome back to the Deep Dive. So today we're looking at something really interesting happening in global luxury real estate. It's a bit of a shift, actually.
Mhm.
For years, you'd think high-end property in Asia, you'd immediately go to, say, Singapore, maybe Hong
The
Kong.
established giants.
Exactly.
Yeah.
But now there seems to be this new player really stepping up. Thailand is suddenly emerging as a regional powerhouse, especially in that exclusive branded luxury space.
It really is a significant moment. We're talking about a fundamental shift, almost a redraw of the luxury investment map in Southeast Asia. Thailand seems to be quite aggressively, maybe strategically, moving ahead of its neighbors.
Becoming the go-to destination. So how did this happen? And maybe more importantly, why does it matter now?
Hmm?
To figure that out, we've dug into some detailed insights from people who are right there on the ground.
Yeah, this is key. Our source material comes from the blog of Ocean Worldwide. They're a luxury real estate agency, and crucially, they've been based in Phuket since way back in 2004.
2 decades. That's significant history in a dynamic market like Phuket.
It absolutely is. And their director, Sandra O'Neill, she's personally helped, thousands of families, investors find their way in this pretty complex, high-value market over those years.
Right. So when you get insights from an agency with that kind of longevity, that direct, hands-on experience,
Yeah,
well, you're getting a perspective that really understands the nuances, wouldn't you say?
definitely. It's not just abstract data. It's grounded in real transactions, real client interactions over a long period. A huge advantage for understanding what's really driving things.
Okay, so let's dive right in then. This claim of Thailand's dominance, let's look at the scale. How big are we talking, this market, and who specifically is driving this boom?
Well, the overall Southeast Asian real estate market is already enormous. Think projected value of $27.07 trillion just for this year, 2024.
27 trillion, wow.
Yeah, and it's still growing steadily, expected to reach almost $31 trillion by 2029. That's about a 2.6% annual growth rate. But the really interesting part, the driver, is the UHNWI segment.
The ultra-high net worth individuals.
Right.
So it's not just general market growth, it's wealth concentration.
Precisely. And the source points to a really striking projection. Something like a 45.2% increase in UHNWI is expected by 2028.
Almost half again as many.
In key markets, including Thailand, Vietnam, the Philippines, these are people with, over $30 million in net assets. So a significant jump in potential buyers looking for very specific, high-end assets.
And they aren't just buying standard luxury condos, are they? The source suggests this demand is laser-focused on a particular niche where Thailand seems to have cracked the code.
Exactly. It's all about branded residences. That seems to be Thailand's winning formula right now.
Yeah.
It's what's really setting it apart from regional competitors.
Okay, branded residences. Let's just clarify that for everyone listening. What does that mean exactly? Is it just slapping a famous hotel name on a condo tower?
No, it's much more integrated than that. We're talking about properties that are formally affiliated with global hospitality brands, the big names like Ritz-Carlton, Four Seasons, and Antara, that kind of thing.
Right. Okay.
And crucially, they offer the whole package of hotel-style services. Think concierge, high-level security, professional maintenance, five-star property management. For an international UHNWI, that's often the biggest draw.
Ah, so it's hassle-free ownership,
Mm-hmm.
especially if you're not living there year-round. Plus, potential for good rental yields, and the brand association helps maintain value and liquidity.
Absolutely. You're not just buying a property, you're buying into a managed investment vehicle with a globally recognized standard of service. That's huge for owners splitting time between countries.
Makes total sense. Okay, so how does Thailand fit into the bigger picture globally with these branded residences?
Well, looking globally, Asia as a whole accounts for about 21% of all branded residence projects. Southeast Asia takes a decent chunk of that, about 12% of the Asian total. But Thailand, specifically, is really leading the charge for the whole SEA region.
And this is where the numbers get quite stark, right? The data from Ocean Worldwide shows Thailand has launched, what was it?
12,656 branded units.
12,500 units. That's a lot.
It is. And the collective value is estimated at around $6.2 billion. And, new projects are constantly popping up, especially in Bangkok. They're not just participating, they're setting the pace in volume and value.
And it's anchored by some really high-profile, almost statement projects.
Definitely. Bangkok is seeing some stunning developments. A really standout example, just to give you a sense of the ultra-luxury end, is the Porsche residential tower planned for the Thonglu district.
Porsche. Like the car company. Okay, that definitely screams ultra luxury. What's the deal with that project?
So it's set for completion in 2028, and it's all about exclusivity. We're talking just 22 units in the entire building.
22. That's it.
That's it. And the prices, they start at 15 million US dollars.
Start at 15 million.
Wow. And they go up to around $40 million for the top tier properties.
Yeah.
So think about that price point, $40 million for one apartment, albeit an incredibly exclusive, fully serviced one.
That kind of project sends a message, doesn't it? It signals massive confidence from major global brands in Thailand's long-term future as a hub for this kind of wealth.
Absolutely. And it shows Bangkok isn't just a tourist city anymore. It's becoming a genuine destination for permanent, or at least semi-permanent, ultra-wealth.
Which brings us back to that core question. Why Thailand? Why not Singapore or another established financial hub? What's the magic formula here?
It seems to be a confluence of factors, really a kind of perfect storm, but a lot of it boils down to a really attractive balance of relative affordability, high service levels, and favorable government policies.
But is that really enough to compete with, say, Singapore's stability and location? Are the policies the main thing, or is it just getting more bang for your buck?
I think it's both, working together. Let's look at Phuket first. That market is absolutely thriving, partly because tourism there has bounced back so strongly, even exceeding pre-pandemic numbers.
Right, the tourism engine.
Yeah, and that success acts like a magnet. It attracts those big brands, Ritz-Carlton, Four Seasons, to set up branded residences because the high-end clientele and infrastructure are already there. Strong tourism reliably fuels investment.
So Phuket is kind of the luxury leisure gateway. What about Bangkok? Who's actually buying these multi-million-dollar units in the capital?
Bangkok's seeing really strong demand, especially from high-net-worth Chinese buyers and also European investors. They're typically targeting that upper-end condos, homes priced above 50 million Thai baht.
And 50 million baht, just so you have a reference point, that's roughly $1.5 million US dollars.
Yeah.
So firmly in the international luxury category.
Exactly. And here's the thing. While $1.5 million plus sounds high, if you compare it to similar top-tier luxury properties in, say, Singapore, London, maybe even Dubai, Thailand still offers a significant relative affordability advantage.
You get more space, maybe better amenities for the same price point?
Often, yes. Significantly more space, land, or higher-spec service amenities for an equivalent investment. And then you layer on the government aspect.
The visa policies, right, making it easier for wealthy foreigners to actually live there long-term.
Absolutely critical. The Thai government has implemented these quite favorable long-term visa programs specifically designed for wealthy individuals, investors, retirees. This removes a lot of the bureaucratic friction you might find elsewhere.
So it's like an open invitation. Bring your wealth. We make it easy for you to stay.
Pretty much. It sends a clear message. Your investment is welcome, and we want you to put down roots. That's a powerful non-economic driver.
And that idea of putting down roots connects to how the definition of luxury itself seems to be evolving in these Thai developments. It's not just about the brand name anymore, is it?
No, not at all. The focus has shifted quite profoundly towards holistic quality of life. We're seeing huge emphasis on wellness, longevity, and also sustainable or green design.
Wellness and longevity.
Yeah.
So beyond just a fancy gym and a pool, we're talking integrated health.
Much more. Think comprehensive health centers built right into the residential complex, offering things like proactive health screenings, sophisticated preventative care, maybe even specialized longevity treatments. Health and long life are becoming the ultimate luxury assets.
Interesting.
And this extends to the buildings themselves. Lots of focus on energy-efficient smart home systems, sustainable materials, green design principles. It's about future-proofing the residents' health and the environment.
But delivering that level of personalized service, especially under a major brand that demands perfection, that must add layers of complexity, right? This rapid growth can't be completely smooth sailing.
Oh, absolutely not. That's the crucial counterpoint. Running a branded residence is incredibly complex, much closer to managing a five-star international hotel than a standard condo association.
Higher operating costs, surely.
Definitely. High operating costs to maintain those service standards. And there's always the risk of oversupply, you know? If development gets too far ahead of the actual sustained demand from UHNWIs, that could become a problem. The management complexity is significant.
And that need for operational excellence probably drives innovation in how these places are managed behind the scenes, too.
Exactly. You need efficiency. And we know from the source material that agencies operating in this high-end space, like Ocean Worldwide, are using technology quite strategically. Their marketing lead, Gail Ovid-Etienne, leverages AI, for instance.
AI. For what aspects?
Not necessarily in the building tech itself, but across the business operations market analysis, finding and connecting with the right clients more effectively, streamlining the buying and selling process. It's about making the high-touch service faster and better through back-end efficiency.
Right, using tech to enhance the human service element. So pulling all these threads together, the location, the lifestyle appeal, the government support, this new focus on wellness, what's the overall outlook for Thailand?
It seems to create this really significant and potentially quite stable window of opportunity. Thailand is doing a very effective job solidifying its position as the leader in Asia for these luxury branded residences.
Provided they can keep that balance right.
Exactly, provided developers and the agencies managing these properties can maintain that delicate balance between solid investment potential, genuine quality of life focused on health, and flawless execution of the brand promise.
Okay, so to quickly recap for you listening, Thailand has really surged ahead to become the leader in Southeast Asia's luxury real estate boom. This is largely driven by projected growth in ultra-high net worth individuals and a very successful focus on branded residences. Key factors are the policy environment, strong tourism, especially in Phuket, and this growing emphasis on wellness and longevity.
And that wellness focus is really shifting expectations. It makes you think, doesn't it? Given how much value is now placed on health and longevity in these developments, what's the next big thing? What non-traditional amenity beyond health centers or smart tech do you think will become standard in ultra-luxury homes in, say, the next 5 years?
That's a great question to ponder. Something for you to think about. And just a reminder, the deep market insights we discussed today came directly from the experts at Ocean Worldwide. They've been successfully guiding families and investors in Phuket's luxury market since 2004.
Decades of experience.
Exactly. If you want to explore more of their insights or check out luxury listings, you can visit their website, oceanwwp.com.
Well worth a look until the next deep dive.
We'll catch you then.